Hello traders, welcome to the video. In this video I'll be showing you a very quick strategy that you can use to catch a longer move in the boom and crash market. This strategy have two ways of trading it. We have the risk entry and we have the low risk entry for this strategy. So this strategy works on both boom and crash 1000. As you can see, I am on the 1 minute chart and this is crash 1000. So here I have four indicators that I use for this strategy. I have the Bollinger Band and I have RSI with moving averages. So the Bollinger Band is an indicator that helps us to know when the market is in an uptrend or downtrend. As you can see over here, we have the upper band, middle band and the lower band. So when market dips into the lower band, it's indicating to us that the market is selling, and sometimes it indicates to us that the market is oversold when it breaks the lower band, and when it breaks the upper band, it's indicating to us that the market is overbought. So we also have the RSI indicator, which has the oversold and overbought level. The overbought level is 100 to 85 and the oversold level is 15 to 0, as you can see over here. And in between them we have the moving average, which is a trend following indicator that helps us to know when the market will change trend and when the market will continue in its trend. So don't worry, I'll first explain how to use this strategy, and then after that I will drop how you can set up your chart to look exactly as what you see over here. So now, how do you combine all these four indicators to make a strategy? First thing we want to do is we want to make sure that the market spikes down in the crash market, as we all know that we buy. So we wait until market spikes down and break the lower band, which is indicating to us that the market is oversold. We come to our RSI and we look for the MA to go below the 15 level. As you can see over here, this is below the 15 level. So then we wait for a cross in between them. We see the cross between the 7 and the 10 EMA of the indicator, and once we have that, it's indicating to us that the market will now change trend. So once we have that, we look for when the crossing is visible. As you can see over here, the crossing is visible around this point. So for the risk entry, we can enter at this point and hold our trade until it touches the 50 level to here. So from this point to this point, then we exit the trade. As you can see, that is almost 20 candles, while the low risk entry is the one that we wait for the market to go above the middle band. So when it goes above the middle band, then we confirm that the market has completely changed trend. So then we can't just 10 candles, or we wait until market also touches the 50 level before we exit our trade from this point to this point. So now let me show you one or two more examples before I go to the bull market and explain how it works. So this is another example over here. As you can see, the market breaks the lower band of the Bollinger Band, and we wait patiently for when market will enter into the 15 and the 0 level. As you can see, we have that around here, and we wait patiently until the cross is visible. So if we look here, we see that the cross is visible around here, and if you also look carefully, you can see on the chart that the market has crossed the moving average to the upside. So now we can enter a trade at this point and close our trade at when market touches the 50 level, or we can wait until it touches this point, 85 level around here. So we can take some of our profit here and also take the rest of our profit around here, or you can just hold your trade and take all the profit at the 50 level, which is at this point. So this is also a nice example. As you can see, market is spiking to the downside and then it crosses the lower band of the moving average, which is indicating to us that the market is now oversold. So next we look to our RSI. We wait patiently on when the 7 and 10 level of the EMA crosses. So we see over here the crossing is visible around this point. So then we enter a buy, then we hold still it touches the 50 level, which will be around this point, the 50 level, which will be around this point. So from where it is, the crossing is visible, which is here, which is the risk entry, until the 50 level around this point. Or we can wait patiently until the market crosses and go above the middle band, which should be at this point. We can also enter our buy here and wait until it touches the 50 level, which is around this point, or it touches the 85 level. We can take some of our profit around this point and leave the rest to run to the 85 level. Now let me go to the boom 1000 market and show you how it works. So as we all know that everything we see on the crash, the opposite will be what will happen in the boom market. So on the boom market, our main focus will be on the 85 level and the 100 level, which is at this point, and then we are waiting patiently until market spikes up and touches the upper band, which is indicating to us that the market is overbought. So once we have market touches the upper band like this point over here, then we wait patiently until when market enters into the overbought level of the RSI. You can see carefully that the crossing is visible around this point, the crossing of the 7 and the 10 EMA. So once we have that, we enter a sell at this point because we are selling in the bull market, and then we buy in the crash market. So then we hold our trade until it touches the 50 level, or we can close some partials in the 50 level, which should be at this point, and then we take all our trade at the 15 level, then we close all our positions. This is another nice example over here. As you can see, market spike to the upside, touches the upper band of the Bollinger Band, then we wait patiently and come to our RSI, then we wait until we see a cross in the 7 EMA and the 10 EMA. So as you can see over here, so the crossing is visible at this point, which should be at this point, and if you look carefully, it has already crossed the middle band of the Bollinger Band, which is telling us that our trade is now a low risk trade. So we wait patiently until the cross, we enter a sell, and then we hold our trade until it touches the 50 level, which should be at this point, or we can just wait patiently until it touches the 15 level, which will be at this point, and then we close our trade before we see the spike to the upside. Now let me show you settings to my indicator. To do that, click on this indicator icon over here. So like I said, I have 4 indicators. As you can see, I have the Bollinger Band, relative strength index, which is the RSI, and I have 2 moving averages. To select the Bollinger Band, first thing you do is to click on this F icon on the main chart. So this is your Bollinger Band. So we make our period to be 20, deviation to be 2, shift to be 0, apply to close, style to be 3 pixel, and select color of your choice. After that, you click on save. To select the RSI, which is the second indicator, click on this F icon on the main chart again, and if you scroll down gently, you can see over here, this is RSI. If you click on that, you make your period to be 14, apply to close, style to be 3 pixel, select color of your background. If you are using black, you select black. As you can see, my background is white, so I am selecting white. To select levels, click on this pen icon that you see over here. Click on this add to add more levels, type 15, 50 and 85. On your style, make it 3 pixels and select color of your choice, but here I am using black. After that, you back, then you click on save. To select these 2 moving averages, first thing you do is to click on this F icon on the indicators Windows 1. So if you click on that, this is moving average. So once you click on that, make your period to be 10, shift to be 0, method to be exponential, apply to close, style to be 3 pixel, and select color of your choice, but here I am using red. Then after that, you click on save. And to select the second moving average, click on this F icon on the indicator Windows 1. This is moving average. So once you click on that, make your period to be 7, shift to be 0, method to be exponential, apply to close, style to be 3 pixel, and select color of your choice. Here I am using black. After that, you click on save. So if you follow my settings correctly, your chart should look exactly as you see over here. So now I want you to go back on your chart, back test this strategy and trade it using your demo account to build confidence with this strategy. If you find this video helpful, don't forget to click the like button, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I drop a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.